morning, everyone. And thank you very much for the callback. You know how this works. Andrew Karolyi, the Charles Field Knight Dean of the Cornell C. Johnson College of Business. I am so pleased and proud to be here together with you all. 15 years, right here, 15 years. Many of you may not realize, but, and I just reminded Alberto Ramos from Goldman that he was there for the very first one. There were 35 people on the fourth floor of the Cornell Club in Midtown, and 35 of us gathered. Why don't you just take a look around and check out how things have changed here. This is absolutely remarkable, and we're so proud to have you all here. Today, we've had a great start here. I am so fortunate to have joining me on this topic. The topic for us here is Latin America and the new global playbook. We've had a number of references to Latin America already this morning. I'm the moderator. We have former President of Colombia, Iván Duque, who would have been here. I don't know if you can see him. Can you hear us, Iván?
Yes, I can. It's a pleasure to be here.
Unfortunately, or fortunately, he is in Belém this morning at COP30, and he's going to be reporting back to us on what he is hearing and learning there. I'm also very grateful to have here sitting with me Alfonso Eyzaguirre, CEO of LATAM. Thank you. LATAM and Canada for JPMorgan, as well as Dr. William Maloney, who is the chief economist for LATAM and the Caribbean for the World Bank. And what an awesome fireside chat. There's no fireplace, but we could still have the chat. And so why don't we just get right into it and just talk about, we can reflect on what we heard in the previous panel, but we can maybe go straight to the opportunities that are there for the region in Latin America, and thinking about sort of the economic landscape as well as the landscape for businesses in Latin America, a very high level. So, President Duque, would you mind launching us off here and starting us off?
Well, thank you so much, Dean Karolyi. It's such a pleasure for me to be here. I really missed not being there in person, but as you know, I'm here participating in COP30 in the Global Biodiversity Alliance. I also want to express my admiration for Alfonso and also to Bill Maloney. I know how much they have worked in Latin America, so I have big respects for them. So when we talk about opportunities and also challenges, Dean Karolyi, I just want to mention three of the ones that keep me awake. The first one is intra-regional trade. Intra-regional trade in LATAM is not above 15%, which is one of the lowest intra-regional trade percentages around the globe when we look at certain areas like Europe or Asia. So it is a challenge, but at the same time, it is an opportunity. If Latin America gets to expand intra-regional trade, I think we will reduce our dependence on trade with other parts of the world, but at the same time, we will be creating stronger aggregated value chains, regionally speaking. The second challenge and opportunity has to do with arable land and the possibility for LATAM to be a bigger player when it comes to food security, not only in the Western Hemisphere, but also around the globe. So we have one of the largest shares of arable land in the world, with great access to water, with also prominent levels of productivity per hectare. So we have to be not only industrializing and being more clever in increasing the productivity levels, but also how we insert to other markets. And the third has to do also with what it has been seen as an opportunity in terms of the age of our population, which is a demographic plus that we have. As we are having this conversation, almost 73% of the Latin American population is below 45 years old. which means that we have a demographic bonus. And we have to be clever enough not only to expand the middle class, but to be able to formalize the labor force. So it is an opportunity now, but it will also be a challenge in less than 2 decades. Why? Because the population above 65 is going to triple in the region. So that means this is going to have more pressure on fiscal expenses in social security and healthcare. So we have to use the opportunity now to insert ourselves in aggregated value chains where the labor market and the skills can be fundamental and play an important role, but at the same time, we have to guarantee that the labor force is formal enough so that we won't have people left behind when it comes to access to social security access 2 or 3 decades from now. So I will stop there in order to hear what Alfonso and William have to say about this. But I would say those are 3 opportunities and challenges that we must focus on right now.
Thank you, Iván. We're going to come back to the challenges in a second, but I hear a very optimistic tone in your assessment and your size up there. And I should have mentioned, remiss of me to mention that President Duque is the inaugural EMI Distinguished Fellow, and we celebrate that and are very gracious for the. So, Alfonso, let's turn to you. It's sort of a general optimistic size up there in terms of the economic and business landscape. Go, take.
I'm gonna be even more optimistic than President Duque, and I complement 2 advantages that he mentioned, or 2 pillars. The first one, on the natural resources, I agree 100% with him. He mentioned land and water. Actually, Latin America holds 30% of the freshwater reserves globally, and 75% of the arable and forestry land in the world. So that's a huge asset. We generate in the region 16% of the net global exports of food. This is protein, animal protein, agricultural products. So it's a huge area. I agree 100% with what he said. In terms of demographics, I agree 100% as well. We have a population of 660 million people in the region. Is 8 years, the median age is 8 years lower than in the US. That's a huge, and even more than in Europe. Our population will peak in 2055. So this is an asset, and it's an asset from when you think about Latin America as a market. Internationals think as on Latin America as a market where we can deploy investments as a consumer market, but also for nearshore. So the labor available in Latin America, because of the reason President Duque mentioned, is going to be available for a very long time. There are challenges, and that list is very long, and we always focus on the challenges. So let's focus for 1 second on the pillars. Then the other one is the role we play in energy and energy transition. Latin America holds 20% of the proven oil reserves. Nobody talks about this, but we also hold vast reserves of all the critical minerals that are required for energy transition. We're talking about copper, lithium, nickel, cobalt, etc., etc. Chile and Peru are the largest producers of copper globally. And then there is a triangle, Argentina, Bolivia, and Chile, that hold 50% of the lithium reserves in the world. So this is important, very important. And then there are 2 topics that I always mention. One is the proximity, the geographic proximity to the US. This is not a minor thing. We share 3,500 kilometers of border with Mexico. That's an asset when you think about nearshoring, but we also share the same time zone. And that's an asset when you think about exporting services into the US. And one example is us, JPMorgan. We have 4,000 people in Buenos Aires. We have lawyers, coders, and they serve the world, okay, but JPMorgan globally, but they serve the US as well.
Yeah.
So that's a huge opportunity. Costa Rica is another case where we know several multinationals have established operations to serve the US. And I mentioned just one last topic. There are many countries, not all of them, that have a clean energy matrix. And we have heard a lot about, digital infrastructure, data centers. Okay, those markets where you have clean energy matrix, a clean energy matrix and good connectivity are great for that purpose.
That's great. That's great. Very, very nice size up. Bill, you contribute importantly to the World Development Report of the World Bank on LATAM. You give a perspective, high level economic prospects for business.
Well, so let me first second what Alfonso and President Duque say about the potential the region has in terms of endowments and where it could fit into the global value chains going forward. In particular, this bit, the energy matrix in Latin America's the greenest I'm applying. So it's only like 50% of electricity is generated from renewables. If the European Union takes their carbon border adjustment mechanism seriously and tariffs carbon intensive products coming in, that Latin America in theory could be very well positioned to export a variety of product manufacturers, but also processed agro to that market. I would also say that 3 years ago, we wrote a report that was very bullish on the potential for nearshoring. At that time, Secretary of the Treasury, Janet Yellen, said, listen, got all this nearshoring potential, blah, 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 blah. That's already been obviously been shaken up a bit in the last couple months. But part of what Joyce was saying, I think, is true. There are two, in the sense that these tariffs have bitten much less on Latin America than we expected, both in Mexico. Most, even goods that could be considered under the USMCA have been grandfathered in, even if they're not formally part of it. And so they're exempt from taxes. So the overall tariff level on Mexico had to be kept relatively low. And Brazil, as was mentioned earlier, 47, 48% are exempt. And the rest are pretty well integrated with coffee, and the like are pretty well integrated in the global market. There's this competing imperative right now that Joe's kind of laid out. One is this desire to bring industry back to the United States, and that all the traditional critiques of NAFTA are still out there. But the other is this allergy to China, and this idea, this new economic Monroe doctrine that Tessa talked about. And I think the latter is going to win in the end. And so there's the cards are going to fall in favor of integrating a region more with the United States economy. And I think the very fact that tariffs on Mexico have been so small relative to what was to the noise around them reflects precisely the American business community had been bracing. So that's one saying, for our competition globally, we need to keep this model going of having Mexico as our backyard. Now, let me be the bummer in the road.
Coming to the bummer part in a second. Okay, go ahead. You want to start? You want to tee us off?
Sure. Unless President Duque wants to go ahead, but
well, we're going to get to the the hard questions right now. So there's a lot of optimism in that tone. We start with that purposefully, Bill. And what we'd like to do is now talk about the fact. Well, 10 years ago, I wrote this book called "Cracking the Emerging Markets Enigma." A copy's out there if you want to go get one. First sentence in defining what an emerging market is talks about the importance of underfunded, undercapitalized growth opportunities stemming from problems. And the problems are really what define them. They can be structural in nature, but there can be other forms as well. And so we should really talk about these key risks, particularly salient to Latin America. Ivan, you started us off with that. You warned us you're coming with that. You painted a very positive picture. Let's go straight to the heart of it, if you don't mind.
Well, I think when we look at the biggest challenges, I would maybe list around 4 or 5 that are the ones that I consider the most complicated to deal with. One is that I see growing levels of debt in Latin America. So we're seeing debt levels on average being above 55, 60%. Now their country is getting to 70%, and obviously in the Caribbean it looks pretty bad. I mean, in comparison to other recent times. So debt levels for me are something that are quite complicated, and also are rising on fiscal deficits. And the reason why I'm worried about this is because there's a lot of budgetary and unflexible expenses. So high levels of debt, not too much flexibility, and investment percentage of budgets being reduced severely. So that, for me, is worrying because that can take us easily to another lost decade unless we're able to bring a lot of private investment that is able to compensate those limited fiscal spaces that countries have. So that's one. The second has to do with regulation volatility. The fact that we have seen so many populist regimes coming in or out are challenging because it hurts long-term investment. And investors want to have predictable government behaviors when it comes to regulation in the energy sector, in the infrastructure sector, also in capital markets, bad cake, you name it. So I think regulatory volatility, it's something that is making sometimes Latin American countries be less attractive when it comes to bringing new sources of investment. The third challenge that I see with some levels of complexity have to do with this idea of having new protectionism measures or policies. So it's protectionism, isolationism, and authoritarianism. Those three at the same time, those isms are for me three big challenges that I would put just in one spectrum. And I would say the other two are related to insecurity levels, where yes, we've seen successful stories in countries like Colombia in the last decade, although we still have many challenges to deal with, Salvador, but what's going on in Ecuador, even in Peru with very low homicide rates, the level of insecurity is increasing. The same thing in Argentina, because now we have transnational criminals being stronger and stronger. So this requires a lot of coordination. And last but not least, has to do with the risk of missing the technology boom that AI is going to create around the world. And this has to do with public education is still very weak, very highly captured by professor unions, and they're not adapting the educational system to the demands that are going to be needed in the upcoming years. And obviously, when you look also at the possibility of being Latin America a hub for data centers, because as Bob spoke, yes, we do have a lot of energy. We have excess energy, clean energy, but for many of the companies, Latin America is not in the primary list where they want to have their data centers. And I think that would be a lost opportunity. So I would say those are the five risks. I think they can all be addressed. They can all be tackled, but I see those five risks as obstacles that if we're not clever enough how to deal with them, I think they will become anchors and will affect their possibility to have a stronger growth in the years to come.
Excellent. Nice size up. Bill, we'll take you next. You were ready to jump into this, so
Sure.
add to the list.
So let me, President Duque is kind of putting it, if we don't get these things together, then things aren't going to happen. Other good things aren't going to happen. I want to be a little bit darker. I predict they're not going to happen. And let me be pessimistic in this way. The first thing is this opportunity for nearshoring. 5 years ago, with Trump won tariffs on China and the like, we did not see a big increase in capital flows to Latin America and fixed investment. We did not. It still continued to East Asia, more or less. And there's a reason for that. When you add up all the downsides of working in Latin America, from the security risks he's talking to, from the weak education system. 30% of firms in Latin America say they can't expand, including Chile, by the way. He say they can't expand for lack of mano de obra calificada, for qualified workers. 30%. In Argentina, the PISA scores of the top of the richest quintile of population are below those in Vietnam. Okay, we invest half in infrastructure of what Asia invests in infrastructure. We have this problem of organized crime, which is no joke. Okay, Argentina, Ecuador now is what Colombia was 30 years ago in terms of threats to the state, the integrity of the state, and we're seeing the penetration organized crime in places like Chile and Uruguay, where we never saw them in the past. And they're not bigger. It's not one cartel in Cali or in Medellin. It's transnational cartels, which are much bigger than the power of any government. All of that is a worry. Now, let me put a longer term spin on this, which is that we grew at 2.5%. That's the worst in the region, in the world since the COVID. And it's not a COVID thing. That is our steady state natural level of growth right now. It's pathetic. Chile, which is the good student of economic policy, good microeconomic policy, the first to really get their macroeconomic house in order, which is great, by the way. No one's talking about Latin America as this hyperinflationary, uncertain region the way they did 30 years ago. That is under control and back to the most part, and that's great. But we're not growing. They haven't had any productivity growth for about 10 to 20 years now, and that's a major preoccupation. And we don't know how to fix that. And I think those problems go very deep. They have precisely, getting back to this primary education thing, we're short on STEM graduates, we're short on técnicos y tecnólogos, mid-level technical people, because we don't have community colleges. Our universities are low productivity. We have very few in the top in the world in terms of quality, and they are very poorly integrated with the private sector. So this kind of flow, this in Silicon Valley model of collaboration, that's not that. Why is this important? Because we just put out a book called The Lost Century of Growth in Latin America, reclaiming the lost century of growth in Latin America. Why is it that we were not able to leverage the natural resources like copper, and now we're talking lithium? Why couldn't we leverage copper in Chile in the last century into a diversified economy, when the Japanese, who are the second largest exporters of copper, were able to do it? And you know, three major Japanese copper companies, Sumitomo, Hitachi, and Fujitsu. You never think of them as copper companies, but they all started as copper companies, and yet somehow they developed, became more complex, and drove the economy. That never happened anywhere in Latin America. And if you look, the number of engineers we had in 1900, the amount of literacy, it all comes down precisely to our ability as a region to use knowledge from abroad, apply it to our local production structures, and grow dynamically on top of it. That is my worry, that between those things that make it just hard to do business there, and our lack of ability to leverage both FDI and these critical minerals and our other advantages into more diversified growth, that we're still going to stay at this 2.5%.
So respectful disagreement is the Cornell way. And you have given us a chance here to talk about this from the perspective of Alfonso. You're JPMorgan, you're seeing vibrant financial activity all over the region.
After all of this discussion, I should exit.
No.
Let me give you some data. Okay, we have 7,000 people in Latin America. Okay, revenues of more than $4 billion. We manage assets for more than $300 billion. We have deposits from corporations for more than $50 billion. So we really believe in the region. I should be exiting the region. So let me give you, I add to the risks.
Yeah.
But we are risk managers, and companies invest globally. We're a global player. We need to allocate capital and manage risk. Yeah. And that's what every multinational does. Nestle, a bank, whatever, a power company. So I can add to the list, and I think I agree with most of the idiosyncratic risks that were mentioned. Crime and lack of stability. Let me add global risks, because this is a region that is open to the world. Okay, so you have trade uncertainty generated in this country. You have geopolitics that do affect Latin America. Three countries, actually more than three, I think 4 countries in the region, you might have the not exact number, William, but the largest trade partner is China. So if this world becomes our
All do except Mexico.
the Central America is of none, yeah. But Brazil, Peru, Chile, and I think Argentina as well, their largest partner is China. So in a world that becomes more binary, that might be a problem. Then we talk about that. I think President Duque mentioned the fiscal deficits of the Latin American countries. I think a larger problem is the fiscal deficit of the developed economies. That debt, I'm not sure is sustainable, and that the knock-on effects will impact Latin America. Okay, because as he said, basically we have fiscal deficits and we rely on the international markets to finance those deficits. Then currency volatility associated with rates. All of that affects the region, but those are global risks that affect every economy, not only Latin America. And on top of that, you have the idiosyncratic risk that were already mentioned. I think it's not worth it.
Yeah. This rings back to Joyce's presentation at the very beginning, where she talked about, I don't know if you call it Fed policy actions. She talked a lot about that, casting a long shadow, but that's part of the global thing. And she talked about how it's all about resilience in these emerging markets. And LATAM is obviously all of that as well. And hyper complexity she talked about. President Duque, thoughts on the sort of sober perspective that Bill shared?
Well, I think I agree with the comments that Bill made, and also with Alfonso. I think at the end of the day, we know the risks, we also know the potentials, but in fact, and I think there's a very interesting figure when you looked at Latin America trade partners 20 years ago or 25 years ago when the century began. The U.S. was the number one trading partner for almost 99% of the countries in Latin America and the Caribbean. When you look at the picture now, you can say that China has become a very interesting dominant player because it is either number one or number two for 99% of the countries in the whole region. Now, when you look at the numbers also with the United States, well, the fact is that China over the last decade has been number one or number two trading partner almost all time, with the exception of 2023, where Mexico took the lead again. So that shows us that there is a high level of interdependence. And for Latin America to behave in this trade wars or permanent tension between the United States and China is making countries behave like children of divorced parents in litigation, because countries don't know how to maneuver, how to move, what decisions to make. So if countries sign the Belt and Road Initiative, they'll be punished by the United States. Or if the countries become closer to the United States and maybe start embracing some relationships with Taiwan, it would also be having some kind of response from China. So that is a reality. But at the same time, I think there's something interesting, and it's that I don't like to see that prophecy that this tension is going to become a war or is going to be something extremely negative just because there's a fact. When the Cold War was present, there was no interdependence from the US and the Soviet Union. Now there is a clear interdependence, not only of the US economy with China and the other way around, but it's actually, those are the two main engines of the world economy. So instead of talking about a new Cold War, I think I rather see it as a hot peace. So this is going to be a peace with a lot of tensions, but I think the interdependence and the need of having both engines of the global economy running is also going to be an opportunity. Now, there's something that I think Bill raised it, and Alfonso also mentioned it, and it has to do with investment in infrastructure. For me, and I saw it as president, I had a lot of questions from media outlets in the USA that they were worried about China's investment in infrastructure projects in LATAM. And I said, well, we want to bring investors from wherever they can come. But the fact is, in most of the bids of critical infrastructure projects, they're not U.S. investors coming to Latin America. And I think Exim banks and DFC and the whole United States economic apparatus should see Latin America as an opportunity for rare materials, for energy, for infrastructure, data center, and so on. So I think that should be also seen. But let me just also mention something about what Alfonso highlighted. Yes, we do have investors. I think, for example, JPMorgan has been very active in LATAM. When you look at capital markets in the region, most of the capital markets in LATAM have been captured by fixed rate products that are essentially government debt.
we haven't seen so many IPOs in the region. We haven't seen new players from the private sector come and offer new opportunities for people's savings to be invested in entrepreneurship, innovation. And I think that's something that we need to change, because most of the portfolio investors see the opportunities, but I've said most of the capital markets are captured by fixed rate, and we need to have more variable rates, which are connected with innovation opportunities and entrepreneurship. But what is happening is that most of those entrepreneurs are willing to go to the US, to NASDAQ, or to Wall Street to have their IPOs, and not seeing the region as an opportunity. So I think that's something that we should be also pretty much worried.
Beautiful, beautiful. You're teeing up the last segment. We have only a few minutes left, but I want to move to the prescription part of the part of our conversation, which is what kind, if it really is about turning investor sentiment stateside or anywhere around the world towards LATAM, notwithstanding these challenges, what kind of structural changes and what kind of appetite is there for that kind of structural change that is needed to turn those sentiments positively towards the region, even more so than is right now. So, Bill, I don't know if you think about this stuff all the time at the World Bank. It's an important part of your mandate. So, structural changes that you think are...
Yes, Nicole. So, first, let me reiterate the tremendous achievement the region has in managing macroeconomic volatility. Again, right now we've seen this professionalization of central banks and the ministers of finance over the last 30 years that have made it so, for the most part, we were the region that was farthest ahead in terms of fighting the inflation of anywhere else in the world. Far ahead of the US, okay? That sends a very rich signal to markets. Yes, it's fragile in some places, other places it's still lumping the Argentina. But nonetheless, pretty much everybody knows how to manage the macroeconomy now, and most people have the capacity to do it. That's very good. These other signals, like organized crime, they're out there. People see them. Some firms in Mexico are paying 7-8% of their revenues in security. Okay, that's a bummer. We need to send some other signals as well. We need to get that under control. I think that's a decade-long problem at least. I think these other sorts of things, like we are open for business in a more organized way. And I'll give you an example just because I have a captive audience and President Duque. But for instance, the coffee axis in Colombia, right? Starting with Barranquilla and then going through good education, stable, very good infrastructure. You could pitch this region as an alternative to Mexico for nearshoring, right? But right now, there's not a coherent selling of that particular region. There's a lot of noise around Colombia's reputation still. No, but we could do that. And then in other places, we have to make these other very visible advances in terms of, we do have the skilled labor that you want. And we are working on these, on getting our ports in shape and the like. We have to signal harder that, when you leave China, don't go to Vietnam. Come to the same time zone, as Alfonso was saying. And that's a lot of homework we have to do. But we need to do it and signal hard that we're doing it.
Okay. What would you prescribe? Your clients are undoubtedly asking.
Yeah, I talk to, investors, multinationals and financial investors all the time. And I think it's very simple. And we all need to reinvent the wheel. Rule of law, number one. Easy, number one. Okay, and that's connected with what President Duque mentioned before, stability of regulatory framework. You need to have visibility. If rules of the game change every year, you have a problem.
Yeah.
Those two are very relevant. The third is red tape. All of these countries, when you try to invest, it's very difficult to get the permits. And I talk to presidents, to public sector officials, and they're all trying to harmonize the permitting between federal, state, and city. That is very complicated. So projects they take forever. Okay, and that makes projects unprofitable. So that's the third. And the fourth, it was mentioned by President Duque, is local capital markets. Because once you have the projects, you need to be able to finance them. And you finance them with banks, local banks, and local capital markets. And international capital markets complement the financing when there is size. But the local capital markets, unfortunately, because of regulatory uncertainty, have dry out. So it's not that companies don't want to lease; it's that investors don't have I give a few examples. In Colombia's one, they used to have a larger capital market, but because of regulatory uncertainty around the pension funds, it's very difficult to invest. Chile happened the same. Now we have a pension reform, there is more predictability. So you will see investors going more into stocks and less fixed income because you have more predictability. Peru, same thing.
Yeah.
I don't remember how many withdrawals the pension funds, have had. So if you don't know as an investor whether you're going to have the funds or not, you may need to sell your shares, in a week because the regulation would change. You don't invest in equities. You invest in, deposits. So that's the problem. So as long as we, develop the local capital markets, we can achieve more investments, plus the other three methods, rule of law, predictability of regulatory framework, and red tape. Those are the three. You don't need to reinvent the wheel.
We'll chip in and then we'll go back to Fred.
Our financial markets in the region are relatively thin compared to other regions. There are a couple of reasons that seem like dumb stuff that we could do pretty easily, but Alfonso will tell me why it's hard. For instance, resolution of legal conflict, contracts, disputes. Right, the United States is somewhere between 3 and 6 months to resolve them. In much of Latin America, it's 3 years. Same thing with insolvency procedures. Again, 3 to 6 months in the United States, 2 to 3 years in Latin America. That just makes the people reluctant to bet on anything that's risky, and anything that okay. Also, the amount you get once you resolve it is a fraction of what you get in the United States. Those things, I don't know what the political economy of reform is, but it strikes me that those are no-brainers we have to fix, and they're also easy to signal that okay, we've got this under control now.
Yeah, the governance reforms are part of all of that as well. President Duque, we're going to give you the last word here in the last few minutes. Prescriptively, what kind of changes would you be advising leadership in various countries in Latin America with respect to trying to address these structural problems and these risks?
So let me, Dean Karolyi, and also to Alfonso and Bill, to close my remarks by trying to put this in a context of optimism and also on the deep part of your question. So as you know, in most of my recent academic life, I've always been asked about Latin America. And we Latin Americans sometimes tend to be gloomy, and we don't celebrate success that easily, as Gabriel Garcia Márquez used to say. But there's a fact. I mean, if we looked at what has been going on in Latin America for the last 35 years, obviously with ups and downs, this have been the best 35 years of Latin American history in terms of economic growth, in terms of expansion of the middle class, in terms of security, social security coverage, in terms of education coverage, in terms of reducing deaths of recently born children, expanding life expectancy. So in most of the human development indicators, I think we've seen the best 35 years of Latin American history. And I think that has to be celebrated. And a lot of this, and I know this is going to be controversial, but a lot of this was reached because I think we embraced many things of the Washington Consensus for structural reforms, obviously also addressing very important social security reforms that allowed us to protect those who are most in need in a very focalized way, and I think that's also to be celebrated. Nevertheless, I think we have to think about the challenge of having, again, a new generation of leaders that are reformers no matter how unpopular those reforms are, as it happened in the 90s and part of the early 2000s. Because we've seen a new generation of populists in Latin America that don't want to embrace technocracy, that don't want to respect the markets, and that are trying to play with decisions that can bring easy political wins, but putting in danger the credibility of the markets. So we have to see the protection of democracy and technocracy and making structural reforms as something that we should not leave behind. And I think it is a major success, and I'll close with Dean Karolyi, that in the last decade, we've seen more Latin American countries as members of the OECD as we have never seen before. Colombia got there, Costa Rica got there, we saw Chile was there, Mexico was there, and now we have at least 3 to 4 countries that are willing to enter the OECD, which I think is very important because that gives a lot of regulation certainty. So we have a lot to celebrate. We have to see the quality of our democracy, the quality of our institutions, and the persistence on structural reforms as something that we cannot leave behind. And I am very honored to see that the Cornell Emerging Market Institute has been putting a deep attention on this with professors like Lourdes Casanova, with your leadership, but also with the support of persons like Roberto Canizales and Gail Canizales. The fact that we're having this conversation is because we believe the opportunities are there. We know there's a story that is positive to be told, but we still have to focus on democracy, markets, and regulation and stability as the cornerstones, and then human capital, education, and how we are prepared for the new technology revolutions. So I think there's success to celebrate. We still have things to address, and we have to address it defending the quality of the state, the quality of regulation, and the quality of politics. So thank you so much, Dean Karolyi.
Beautifully concluded. Please, so